The trading hour, and let's get you another corporate conversation now. We're going to speak with the management of Emami. It was a weak set of earnings this time. Domestic revenue came in at just around 5%. Volumes grew 2% for the quarter as well. But the management in their call has said that they expect the domestic business will grow at 8 to 10%. This is for FY24, and that the international business will grow above 20%. This is both for FY24. So we're joined by the management now. NH Bhansali, the CFO and CEO of Finance, Strategy and Business Development at Emami, joins us now. Mr. Bhansali, thank you very much for taking out the time and speaking to us today. This is Pavitra. So, can you take us through a little bit of where a bunch of this growth will come from that you're talking about for FY24? Because in this quarter, we did see that the pain management segment was down around 10%. The healthcare part was down around 13%. So can you tell us where this growth will come from in FY24?
Sure. See, the growth in the fourth quarter itself had been at 9%. And the base correction for the immunity products and also for the pain management, it has happened in the past, in the last quarter and also in the earlier quarters. Because of the COVID, there had been a higher sales. So that base correction has already happened. So on the top of it, we expect normalized growth from these products, and also the summer and winter are expected to be normal for the current year. So this we expect a good growth to come in FY24. And coupled with growth from acquisitions, kind of Dermicool, and also our subsidiaries where we have already invested, they are also firing a good growth. So in international business, which has delivered a 19% growth in this quarter and is expected to deliver the same kind of a growth in FY24 as well.
Mr. Bhansali, can you give a little more clarity to this by first letting us know what is your revenue mix between summer and winter? Just a percentage will help. And because if I look at Q4, BoroPlus, which is winter, that also was declining. Summer products like Dermicool and Navratna, they were also down. So both sides of the business were under pressure in the fourth quarter. Now Q1, because of this intense summer that we're seeing in many parts, are your summer products doing better? So basically, what is the mix and what is the outlook on both summer and winter?
Sure. So the quarter 4 does not factor the winter products. In fact, the quarter 3 is for the winter products majorly, and quarter 4 is for the summer products. Though there is slighter sale, but for the BoroPlus, quarter 4 is not that significant, right? And summer products, though the summer had been scorching and has come, but there had been intermittent rains, and there had been an excessive rainfall in few of the states in the March itself, starting from there, and this continues. So the summer of tax has impacted. Looking at kind of the mix of mixes, it is around summer and winter. Also, both contribute almost the same kind of a thing. Apart from this, there are Zandu balms and all. So they contribute around Zandu balms and other products which are of all season. They contribute around 25% also on an annualized basis.
So is it 25, 25, 25, summer, winter and the other products? I'm just trying to understand. You're saying summer and winter is equal contributor. How much is that? And in the first quarter of this year, now in April, May, June, is summer looking better?
Summer is better, but because of the intermittent rains, it is impacting the scorching, the impact of that summer. And so it is not as per our expectation, but still it is doing good.
So then do you think Q1 revenues will be lower than the full year average revenue growth of 8 to 10% that you anticipate? Is it possible that Q1 could be on the lower side?
It will be very difficult to say something very specific on this, on the quarter, but on a yearly guideline, we maintain that. So because there are so many other cuts, it's not just summer.
Sure.
Then, as I said, then there are acquisitions, so that also has to fire, and so the subsidiaries performance, international business. So on an overall basis, that kind of a double-digit growth we are expecting.
Can you talk about Kesh King, sir? In Q4, the revenue growth was muted, just 1%. Ever since you acquired the company also, it's not that the revenues have been firing. What's the likely run rate going ahead for Kesh King?
So we also expect a good growth from the Cash King because the oil sector, it had been in the past year, the oil sector had been kind of muted as a category. But now it has started looking up, and we expect in the volume growth of in single digit volume growth in Cash King as well, which would be coupled with oil and also the shampoos. And there are many other interventions which we are taking in the Cash King portfolio itself.
Okay. Sir, I was looking at the male grooming segment that has grown very well. It's up 30%. Can you tell us what is the expectation in terms of growth for the male grooming, and how much will it contribute to your overall revenue?
Male grooming is also in the last quarter it has done well, but on an annualized basis also there had been some good growth. So we are back on the track, and we expect a normalized growth of around 10 to 15% on the male grooming overall.
Okay. Sir, now just to sort of wrap it up in terms of the overall holistic company picture, can you tell us, for FY24, what will be your organic volume growth? And then coupled with the acquisitions, what will be the total volume growth? And what are the margins that you are hoping to clock in FY24?
Right. For FY24, because the Dermicool has already been factored in the previous year, that was the first year. So current year it would be FY24. Everything would be the organic growth itself. So we are not factoring any inorganic growth there.
So what is the growth that you're looking at? Total volumes for FY24?
So price growth of around 4-5% generally we take. So balance would be the volume growth.
Okay, so another 4 to 5% volume growth plus 4 to 5% price growth, which brings us to 8 to 10% domestic revenue growth, right?
Right.
Okay, so what about margins? If raw material prices stay where they are, what could your FY24 margins look like? Can you improve from current levels of 25.5% that you did in FY23?
So it is expected to improve to around our normalized level of around 27% for the full year guideline.
Okay. All right. Mr. Bhansali, we'll leave it at that. Thank you very much for joining in. That's the word coming in from Emami. The